The market wants to get to 6,000. They want to break through that. That's just kind of that big round psychological number that sits out there. Markets kind of get gravitated to it. This test of 6,000 today, tomorrow, Wednesday will not be surprising at all, just because, again, it's sitting there. The markets know it's there, and they're going to try to get to it. Let's talk a little bit about the markets, what you need to know before the bell this morning. The S&P is doing fine. We keep talking about this kind of ad nauseum. There's nothing to worry about. Lots of negative headlines, though, keep coming out saying, oh, market's going to crash, this, that, and the other thing. Really no sign of that just yet. We had this bit of weakness that we saw post the Trump election. Everybody got very excited with the election, had a little bit of a pullback, not surprising. Held support at the 20-day moving average, had rallied off that last week, and again, that's going to continue today. Goal today, really, for the market is to try to generate about 50 points to the upside, retest the 6,000 level on the market. That will probably try either today or tomorrow to do that. I wouldn't be surprised. Breaking out to all-time highs this week would not be a surprise at all either at this juncture. But again, the markets are doing just fine. We're about to flip that short-term sell signal back into a buy. So again, that'll help give the markets a little bit of lift. Now, just understand this is still at a very high level. So upside is going to be somewhat capped here. I wouldn't expect this market to run off to 6,200 anytime soon, but certainly could. But with signals kind of fairly elevated right now, it's going to be a little bit more of a challenge to generate higher prices here in the near term. Markets are not yet completely overbought yet, but they're going to be overbought today or tomorrow, depending on this rally. So again, there'll be some limited upside here. Certainly want to participate with it. But I think 6,000, that nice kind of, the market wants to get to 6,000. They want to break through that. That's just kind of that big round psychological number that sits out there. Markets kind of get gravitated to it. So again, this test of 6,000 today, tomorrow, Wednesday will not be surprising at all, just because, again, it's sitting there. The markets know it's there, and they're going to try to get to it. Outside of that, this morning, we're going to see 10-year Treasury yields perform a little bit better as well. Over the weekend, there was a nomination for Treasury Secretary. We're going to talk a little bit more about that this morning, because the markets may have this one wrong. We'll see. But very excited about Scott Bessent, who is basically a fiscal hawk, getting nominated for Secretary of the Treasury. So bond yields are going to be dropping pretty sharply this morning, as expectations are that he'll start kind of reducing the debt and the deficit. Again, this is one of those kind of platforms of the Trump administration, which is to reduce the deficit either through the Department of Government Efficiency, his Treasury pick, and a variety of others. There's this focus on trying to reduce spending and the deficit. We'll see how that goes. Market volatility remains exceptionally low here, and again, not surprising. We're back down to 15 on volatility. So again, since the election, a lot of that pre-election risk, concern about the market continues to keep volatility extremely suppressed. It's very hard to kind of expect volatility to drop much further from here. It certainly can. We've been down to 12 before on the volatility index, but again, it's just we have very, very low volatility in the market, and we just kind of continue to grind higher, here in the short term. Outside of that, the dollar has been exceptionally strong, had a little bit of a pullback going on this morning, but again, not surprising. We've had a huge rally in the dollar. It's very overbought here. We do need a bit of a correction in the dollar here before it can make any kind of moves higher. But again, just this huge rally in the dollar. Again, a lot of this is now really kind of driven on this idea that policy and regulation under the new administration is going to lead to stronger economic growth. One of the the draws of that is stronger economic growth pulls in more money in foreign reserves into the U.S., and that, of course, winds up either in bonds or in the stock market. And so again, we kind of continue to see foreign inflows into the U.S. very, very strong, continues to support the market on that front. Obviously, we can't not talk about Bitcoin this morning because, again, it's interesting is that, there for a long time, Bitcoin was not doing a whole lot. In fact, over about a 2-year period, we'd gotten very overbought on a MACD basis back in early 2024 and pretty much just didn't do anything here for a while, and all the laser eyes went away on the internet. Well, now they're all back. So, in fact, this morning I posted out a tweet that said, markets are exceptionally overbought here and investors are chasing leveraged ETFs. this won't end well. And I got responses back saying, yeah, it won't end well for those guys, but if you're in Bitcoin and MicroStrategy, you'll be just fine. So, no, Bitcoin is exceptionally overbought here. You're going to have a correction in Bitcoin at some point. You've got a very, very elevated MACD that's about to trigger a sell signal. So again, when you get that sell signal, you're likely going to go through at least a consolidation process, if not a pullback. So just be aware of that. That's just part of trading. And that's kind of what happens to markets over time. That's what you need to know before the bell this morning.